Long before the concept of money came into existence, people relied on bartering, trading, and growing goods for their needs within small communities. During these times, it was relatively easy to keep track of what was exchanged and who owed whom. Keeping records or tallying these exchanges was essential to know who had received payments and who still had outstanding debts. However, as communities grew and economic activities became more complex, maintaining these records became increasingly challenging. OU notes seemed like a solution, but they were difficult to enforce unless you personally knew the issuer. As a result, people started using items like whale teeth as a form of IOU, enabling them to trade with a broader range of individuals and store their purchasing power for future use. In essence, as money was invented, so was the concept of debt. Once people began using money for trade, they realized that it needed specific characteristics to be effective. Barley was heavy and not easily portable, while whale's teeth were not easily divisible. Shells were abundant and had no intrinsic value, making them unsuitable for trading outside of local communities. Furthermore, the possession of substantial wealth translated into influence, allowing individuals to accumulate even greater riches. Recognizing the significance of this connection, monarchs embarked on the practice of minting coins from precious metals, adorning them with symbols to vouch for their weight and worth. This transformation marked the advent of metal money, meeting the essential requirements for streamlining trade and commerce. These coins, standardized and universally accepted, paved the way for more efficient economic exchanges. Carrying large quantities of coins was cumbersome, leading early Chinese rulers to keep heavy coins in the royal treasury and issue paper IOUs for long-distance trade. While these notes had no intrinsic value, people trusted their worth, knowing they could always exchange them for gold, silver, or the coins they represented. As global trade expanded, the concept of paper money gained widespread acceptance. Yet, as its usage grew, concerns emerged regarding the ease of excessive money printing. Consequently, efforts were made to link the value of money to gold, establishing a universal standard for currency exchange across different nations. Over the course of time, the world gradually departed from the gold standard, leaving trust as the sole determinant distinguishing the value of banknotes from ordinary paper. In ancient Yap, colossal stone discs, referred to as rye stones, held a status akin to gold. These stone discs were initially employed for tax payments, eventually leading to their widespread adoption as a form of currency under the chief's authority. The heaviest of these stones remained immobile, while transactions predominantly relied on promissory notes backed by their value. This innovative system gave rise to the inception of rudimentary banking practices, particularly when chiefs started accepting these promissory notes for taxes, consequently relinquishing their control over the money supply. In the 16th century, Spain repatriated a substantial haul of precious metals from its colonies. Surprisingly, this wealth infusion didn't translate into economic prosperity as expected. Instead, traders responded by increasing prices to align with the heightened purchasing power, ultimately leaving returning explorers with no tangible financial advantage. However, individuals carrying debts experienced a relative reduction in their obligations. This early episode exemplified the emergence of the theory that an excess of money pursuing a limited supply of goods could trigger inflation. The proposed remedy was either to boost the production of goods or curtail the circulation of money through increased savings. During the 18th century, the British compelled their American colonies to pay taxes exclusively in pounds, simultaneously forbidding them from issuing their own currency. This directive effectively compelled the colonies to engage in trade with the motherland to secure British pounds. The enforcement of this policy played a pivotal role in instigating the American War of Independence. The aftermath of this war witnessed the emergence of the American dollar, which eventually ascended to become the world's preeminent currency, prompting various countries, including Britain, to accumulate substantial reserves in dollars and thereby endowing considerable influence on the American economy. Banking emerged as a highly profitable enterprise as financial institutions thrived on the practice of lending at interest rates higher than what they offered to depositors. Banks recognized that, so long as not all depositors demanded their funds simultaneously, they could extend more loans than the actual funds they held. This pioneering fractional reserve banking system ultimately prompted the implementation of government-insured deposits to avert bank runs. However, in the 21st century, some banks elevated the concept of fractional reserve banking to new heights by heavily relying on loans secured against previous loans from other banks. This intricate web of interlinked lending practices was a contributing factor to the financial crisis of 2007, which sent shockwaves through the global financial system. Amidst the financial turmoil of 2008, economists drew a clear distinction between money generated within the banking system and that originating outside it. Money created within the banking system finds its source in new loans extended by banks, thereby establishing private assets and liabilities. In contrast, money originating outside the banking system is a consequence of government bond sales, effectively generating external money that supplements the public debt. This external money was strategically deployed to purchase troubled private debts from financial institutions, ultimately erasing those liabilities. This astute move not only alleviated the burden on the private sector but also preserved its wealth during a challenging financial period. The abandonment of the gold standard in 1973, the world has persisted in utilizing US dollars for international trade, despite their absence of intrinsic value. Remarkably, the dollar's value has proven far more resilient than anticipated, even in the face of an expanded supply of dollars. This enduring stability could be attributed to the widespread global ownership of US dollar assets, reinforcing the faith in its reliability. As a result, the dollar maintains its value, upheld by the collective trust of nations and individuals worldwide. Coins and paper currency, once technological pioneers, have now dwindled to represent only 2% of transactions. The global landscape has witnessed a paradigm shift. thanks to the swift revolution brought about by credit cards and electronic banking, enabling transactions to conclude in mere seconds. The digital age has ushered in the emergence of innovative currencies like Linden dollars and cryptocurrencies such as Bitcoin, all of which possess the fundamental qualities of conventional money. However, these novel forms of currency may pose a challenge to government-backed money, particularly when authorities and financial institutions endeavor to regulate them, setting the stage for a potential transformation in the financial world. As digital currencies and new forms of money continue to emerge, it raises the question of how governments and banks will respond. If they retain the power to control money, it leaves users wondering about the potential uses of this authority. Money is crucial in the modern world as it simplifies trade, fosters economic efficiency, and enables savings and investment. It is the foundation of globalization, allowing international commerce, and plays a central role in financial services, government revenue, and economic measurement. Money's continuous evolution, from digital payment systems to cryptocurrencies, reflects its ongoing importance in facilitating innovation and progress. Thank you for watching Legends. Don't forget to subscribe to our channel, share and hit the bell icon to be updated with our latest vlogs.